All right, mic check, mic check. Let me know in the chat. I think there's 1 or 2 people in here. Let me know if you guys can hear me. And let me know if the sound from the tape is too intrusive. It shouldn't be, but let me know if it is, please. We're going to get going here in just a minute. I'm getting my screen and everything kind of organized so that I kind of have everything up as we're watching stuff and things like that. So just bear with me for a minute here. Let me bring up the stream should be on the Federal Reserve site. I love how I type Federal Reserve and it doesn't even come up. The first search result isn't even Federal Reserve. So you guys are going to have to excuse me for the way that I sound. I am a little sick, so sorry that I sound like garbage. I was hesitant to even do this stream today because of that, but I'm just going to battle through it. Work doesn't stop because I don't feel good, so just look at the calendar. Could be here, but there's no link for it. Okay. It's not here either. What the fuck is going on? Why is the link not anywhere? Well, this is a problem. Can somebody, like, if you guys already have the link for this or whatever on YouTube, can you guys send this to me, please? What is happening? Why isn't this? Like, I've never, like, there's a link for this. There's a link for this. There's a link for this. There's no link for the FOMC meeting. What in the hell is going on? Somebody please send me the link in the chat, please. If you find it before me. That's someone else's stream, not from the Federal Reserve. There's no link to this yet. Like, I'm not crazy, right? Like, doesn't this start in about 10 minutes? Or am I like super early? It starts at 2 p.m. Eastern, right? Okay, so I guess I just haven't posted the link yet because I'm so early. All good. Hold on, I got some people messaging me. Okay, so it looks like Austin messaged me the... Oh my God, so they moved it to 2:30 now? Of course, they would do that. Yeah, so that's really weird, like... Yeah, so like the link to... That's so funny. The link that they give you to watch it on YouTube like doesn't work, but this one is active. So maybe they haven't put the stream on YouTube yet. That's really weird. All right. I'm going to get myself cleaned up just a little bit so I'm presentable. I'm just going to leave the chart up here for now. And we'll go over the chart as it stands right now. When I come back, just give me like a minute or two. I'm just going to like blow my nose, smoke a cigarette, get some water. And we should be good to go. So I will be back in just a second here. Yeah, well, yeah, I just realized I'm like an hour early. The time zones with the daylight savings time is like really screwed me up. So since I'm early and I already started the stream, that's cool. We're going to go over charting anyway beforehand. Screw it. If I'm going to be streaming for that long, whatever, I'm streaming for an extra hour. I don't really care. I'm sitting here during the day anyway. But anyway, like I said, I'm going to go like take some medicine real quick, get some water, do my thing. Just give me about, 2 minutes and I'll be right back. I got to get my daughter situated too. She's actually home from school today. So just a minute or two and I'll be back in a second. All right. Looks like we're getting a little pre-FOMC pump here. For those of you guys that are joining me, welcome. Sorry, I'm a little under the weather. Sorry, I sound like garbage. You can get my, there we go. Hopefully you guys can see me now. Let's see. All right. So for you guys that are just getting in and joining me early, thank you very much. I appreciate it. Make sure that you smash that like and subscribe button. Helps me out. It will notify you whenever I'm doing live streams. I'm also going to be live streaming on Friday. Friday nights I do live streams. So we do little beer, little whiskey, little charting and stuff on Friday nights at 8 p.m. Central Time. That's 9 p.m. Eastern. So we're going to be going over some stuff real quickly here. There is one thing in particular that I wanted to go over. And that is, if you guys watched the short analysis video that I put out yesterday, I mentioned on the daily chart that I'm really, really waiting to see what happens with our OBV down here. So if I make this a little bigger, I went over this just briefly in the video. You can see how down here, okay, that for the most part, all through here, we were chopping in this little range on the OBV. It had a throw under, broke back in, and then this was the signal to be buying, right? So right here on this candle, we broke above the limit. On this candle close, it also closed above our range high. This was the candle that I longed, and I think I closed out here, so I didn't grab the rest of the top, but I did short up here later on. So right now, if you look at the price action, we broke up real hard, real fast. We've been basically going straight up, obviously. But we're ranging right here in this same kind of like dead zone in this OBV. So I'm going to be paying very close attention to this. Right now, it looks like it might be starting to curve over just a little bit. Obviously, none of this is confirmed yet. This is going to confirm our cross, this next candle, to the bearish side. Now, obviously, this is in bullish territory here. But from what I am expecting, this is pretty normal. I always stream the FOMCs, and this is super, super normal. Normally a week or two, or like the 2 weeks following or, prior to an FOMC meeting, normally we see like a really big boost in price. So there's a lot of uncertainty around what's going to be happening today with the FOMC. This is honestly why I'm kind of hesitant to be scalping this in the first place. We don't know if he's going to be super hawkish or dovish today because of what's going on in the banking sector in the United States. So it's a little kind of a sketchy, kind of an intimidating thing for me to be scalping, especially doing it live. So I moved just $300 from my main account, made a sub account, and just put $300 in it. And for right now, I'm trading on Bybit. There should be a link for BingX. Normally, I trade on BingX, but I did transfer some money off and just made a sub account on Bybit to be scalping this on Bitcoin today. The price action is obviously going to be moving Bitcoin around. So we'll kind of see what ends up happening with that, as we get closer to the FOMC when it starts. But for right now, we're pumping. And this is, like I mentioned, this is pretty normal coming into an FOMC. So I was getting questions earlier about, and feel free, like use the chat and everything, like ask questions and stuff like that. I was getting questions about this when I posted this yesterday on Twitter. Oh, this yearly support resistance level. We're right at the very, very top end of this and rejecting off the top. And people were like, oh, well, how did you decide where to put the box? one of the most important things that I can tell you guys, even if you're just beginning and just starting to get into like technical analysis and stuff, is when you identify a level of support or resistance, which is basically just supply and demand, when you identify one of those, depending on what time frame it is, do not delete your stuff off your chart. Okay. And the reason why is exactly how I was able to place this. So if I come out to a daily, let's make sure that we can see this on the daily chart first. Let's organize this a little bit. There we go. If I come up to a daily chart and I zoom out, okay, there's a level right here. Maybe it's on the 4 hour. Yeah. So right here on this 4 hour. Okay. This was before the Luna USDT or UST dump or whatever. This was Luna UST depegging. Okay. There was this really, really good, well-defined range that we had here. I made a ton of money in this range. This is simply the same level. Okay. So if we zoom out and we scroll over, this is that same level. Okay. I literally just copy and pasted the box and put it in the same spot. And sure enough, now we have our yearly support and resistance level over here, which is what we're battling in terms of resistance right now. This is why it's been really choppy up here. This is why the volume has been dying off. So just note that, when you guys are putting stuff on your charts, if you guys are drawing levels and stuff like this, don't delete these, like leave these here. And later on, if we retrace, these might be targets for shorts later on, and you already have them labeled on your chart. So, if you're playing the short side of it, where to be taking profits, where there's going to be demand, so that you can be averaging out of your positions and stuff. Same thing to the top side, where there's going to be resistance. That way you're not accidentally longing into it. There's a ton of people that are longing into this. I personally am not. I'm currently short on this, and I placed a bunch of bids. Like I said, I moved about $200-300 over here. Okay. So right now I've got ladders up here. I think that this is going to be super volatile. I think that these probably end up getting filled up here. But for right now, I just marked it in basically where we're at right now, and I'm holding this short for the time being. Okay. So we do have a wedge here. I don't know what these other lines are, but we do have a wedge, and then we've got our upper limit here. We had a couple throwovers to the top side of the wedge. So that's kind of what I have illustrated here, just on the Bybit chart. I don't have this drawn on my normal chart. And please let me know in the chat if this is like too invasive, like with this sound, if it's like, making a problem with you guys being able to hear me, let me know, and I can turn the volume on that down for you guys just a little bit. But let's move this. There we go. So since I transferred over such a small amount, I am only, I jacked up the leverage. Normally, I don't recommend using anything more than 10x, especially if you have like a small account or whatever. But, just for the sake of making, a little bit of money on this or whatever, that's why I only, transferred over like, $300 or whatever to this tiny account. And I put the leverage up just a little bit. So I'm assuming that these probably end up getting filled, but we'll have to see. The OBV here on our 1 hour chart is looking pretty strong. It broke above our range highs here, which is bullish. So you draw a line here, that's pretty much where you'd be looking for a break. Okay. So that's kind of where we stand right now. But yeah, no, I try never to use my main account for scalping FOMCs. I normally transfer off whatever I'm going to be using, normally between like $300 and $500. Normally I do 500. But just with the amount of uncertainty surrounding this particular FOMC rate decision, I felt like going a little smaller and just playing a little safer, right? For all we know, he could be like, okay, we're cutting rates instead of raising rates. And I mean, everything is just going to like completely take off. I would immediately be longing and flipping sides here, closing these positions out and immediately longing, because the volatility is going to be to the upside on that for like a quick long scalp. So that's kind of what my plan is for today. Just play it a little more conservative, just because there is really no guarantee on what he's going to do. Most people, the consensus is he's going to raise rates by 25. But if he decides to do nothing or to cut, then that's totally going to change the playing field that we have right now. So this is going to be very interesting. So this candle that we have right now, this 1 hour candle, this will close right at the beginning of the FOMC. So I'm going to be paying attention to these candle formations here. On the 1 hour, we do have a doji. Then we've got, just another bullish candle here. And currently it is a bearish engulfing. So we're going to have to see how this develops over the next hour. So in the meantime, let's go ahead and we'll take a look at our actual liquidity. Yeah, this is just doing its thing. It's not doing anything. Just kind of playing in the background. So they're probably going to release the stream on YouTube probably like 30 minutes or 20 minutes before. So I'll just keep updating that. But let's take a look at our liquidity real quick. If you guys are interested in High Block Capital, there is a link down in the description below. If you guys want to check this out, help support the stream. I personally pay for this. I'm not sponsored by them. I know, kind of a shameless plug or whatever, but I use this every single day. And it is extremely helpful to try and figure out where the liquidity is, because price moves towards liquidity, right? So for right now, we do have liquidity in both sides. This is why yesterday in that short video I put out, I was like, yeah, we're probably going to end up getting, some kind of a Darth Maul candle. It's probably going to end up, like grabbing liquidity in both sides. That means to the top side, we could see as high as 30K. To the downside, we could see as low as 27. That's a huge range, right? Like that's a $3,000 range, like a 4% price move in both directions. We have seen that before. We have definitely seen that before when it's been FOMC days. So I would personally expect that to be happening, where we see some kind of big liquidity grab in both directions. Holy crap, my concurrent viewers just like shot up to like 50. That's crazy. So like a whole bunch of people just joined in the stream. That's awesome. So welcome everybody. Make sure you smash that like and subscribe button. I know that I don't sound very good. I'm a little under the weather, so sorry about that. But that's awesome. I don't know. There's a whole bunch of people that just joined in. That's pretty cool. Maybe somebody retweeted me on Twitter or something. I don't know. But anyway, on these individualized levels, if we zoom in here, we can kind of see, kind of that same situation, right? Except this is just going to be on a lower time scale. So if we zoom in on just this, we can get a better idea of exactly where these levels are. So we got a really thick wall above us up until, I guess, about 29.4-ish. Okay. And then it starts kind of like thinning out up here. I would be expecting at least this liquidity up here to be getting snagged if we're going to be like more bullish or whatever. The bot is in a long. Are you referring to the Venom algo for the beta test? It is in a long. It entered a long at 11. My time. So depending on where you are. So it entered along here at the bottom. So that means that should be in profit currently. Hopefully I don't like dox anything with my algo here, but we'll go ahead and take a look at that. Okay, yes. So the algo did enter a long. I'm not exactly sure why it entered along right at the top, but I don't know. We'll see. I mean, this price action is going to be largely dependent on what happens with Jerome Powell. So we'll have to see what happens with that. If you guys are interested in the beta test and interested in Venom algos, I'm not really going to be going over too much of that stuff in this live stream. That's not really what this stream is about. But if you guys are interested in that, there's links and everything down in the description. Make sure that you follow @VenomAlgo on Twitter. And if you're interested in getting into the beta before the free public beta, pretty much all you have to do is create an account over at Astrobit. When you get the email confirmation that you joined and signed up, there'll be a Discord link in there. Go into the Discord, go into my my Cobra Venom channel, and there'll be information there on how you can, you have to read the pinned messages, and there'll be instructions in there for you if you're interested in that kind of stuff. Free public beta goes on April 7th. There's going to be 10 spots. It's going to be a contest. My website is going to be going up on Monday. The free public beta goes on April 7th. There'll be 10 spots. It'll be 2 weeks long. And then after that, it'll go live. So if you guys are interested in helping me test it so that I can make changes to it before I run it through AI and machine learning, that's pretty much what the beta test is for. You can throw a little bit of money at it, maybe kind of, see how well it trades or whatever. Chat with me, chat with the other people that are using it and stuff like that. And, help me basically improve it. There's already a couple things that I've noticed. And I've been in discussions with the dev team because it did not long through here because the volume was very heavily derivatives and it wasn't like a lot of organic spot volume. So it did miss most of this. However, I already know why it did that. I just don't want to push any changes before the FOMC meeting today. So that's going to be something that I'm going to be working on with them later, probably like next week or something. And again, I don't want to be changing things too much because like I said, I'm going to be running it through Astrobit's proprietary AI automation system. So we'll have to see what happens there. Let's bring this down to a 15-minute chart. I don't necessarily need this on the minutes. Go ahead, draw some ranges here. Why is this white? It's so thick. What is going on? Okay. Just kind of setting up my my chart here for the FOMC. This at 1. This is going to be dashed. Okay, so this is our swing high. From here, I would call this a swing low. Okay. Yeah, pretty much. Let me take a look at some other things here, see what's going on. Looks like Didex came down a little bit. Looks like SPX is rejecting from 4,000 right now. So it seems. Yeah, so this has been popping up. How's the volume look? Yes, that's not necessarily a good thing. We're making lower highs here. We're making higher highs from here on the OBV. If we flip this level, it could come up higher to be retesting like 4,100. But again, so much of this is dependent on how bullish or dovish Jerome Powell is today and what he decides to do with the banking crisis and all that. I think that the meat and potatoes of the meeting is probably going to be in the press conference, which is why I'm going to stream literally the entire thing. Because they're going to be asking him tons of questions about that. So I think that's where the meat and potatoes of the meeting is going to be. His speech, quote unquote. It's really just like a pre-typed thing. You know what I mean? So I'm sure that there'll obviously be pertinent information in there. I'm looking forward to seeing what the dot plot is going to be and how they've adjusted it. And the dot plot and the press conference, I think, are probably going to be the two most important things that end up moving the markets. So that's probably what's going to end up happening. Wow. NASDAQ broke out of the bull flag to the top side. It's hitting resistance right now. Looks like it's putting in some kind of a doji up here so far. Yep. Really nice breakout from these lows. If you were playing indices, if you trade options or whatever, this was a fantastic play here to trade this breakout, which is pretty awesome. It looks like we're already dumping, which is kind of crazy. We're good, I don't know, about an hour away from the FOMC actually starting, and this is already just like shit in the bed up here. So I just double down on my position. That's going to increase my range a little bit. So we'll see what happens with this. Obviously, again, high risk scalping today on this. You guys are more than welcome to follow me. None of this is financial advice. I'm not responsible for you clicking your buttons. So trade accordingly. Again, I separated out a very small amount and funded a sub account with just like $300 to just be kind of playing around with some scalps today. So we'll see how this goes. Excuse me. I hate being sick, guys. It sucks. Yeah, it looks like this is we're getting a little dumperoo right now. Getting a little dumperoo on that 15-minute chart. I like it. We broke our immediate lows up here on the 15-minute. Now we're pushing down to this little support area here. I wonder if I can just draw. Oh, fuck it. Whatever. Right here, basically. I'll make this a different color so that you guys can actually see this. This is where we're pushing down to now. Kind of happy I doubled down on that position real quick. Catch a little extra P&L here. And, I'm just going to keep my eye on the order books. I keep my eye on the ticks, on the actual tape, and look for any kind of signs of, this kind of tapering off or whatever. If this is going to end up showing weakness here and we end up getting a bounce, right? It looks like we're bouncing right at this this little wedge line that I have. Actually, I think this should be a little lower. It should be like this. See if this pushes down a little bit. This candle closes in 5 minutes. Normally, I open and close my positions on the candle's close, and then make a decision from there. If today wasn't FOMC, I would have shorted 28.7. McShipperson. Good to see you in here, buddy. McShipperson is probably watching the live stream and mobile trading while working. He's a multitasker. If you guys don't know who McShipperson is, he's actually come over to my house. We did a couple live streams together. Hopefully when I'm not sick, I'd love to have him back, have some whiskeys and stuff. I need more of that clear ice. Got to get some more clear ice and a nice bottle of whiskey. And we'll kick it when I'm not sick. Yeah, so it looks like this is getting some this is going to get some momentum to the downside here. For those of you that are asking, no, this is not the RSI. This is the SMIO. You can notice it calls tops and bottoms very nicely. Called a top here. This was a good short. Called a top here. This was a good short. Almost hit the bottom here. I probably would have played. I think I did play this actually. That was a solid long. Works best on the 15-minute. Normally I don't go below the 15-minute. Everyone's like, oh, scalping, you should be on the 1-minute chart. I can't do all that. I'll give myself a friggin' heart attack. I can't do all that. Yeah, so this is looking nice here. I guess I'll just take my take this back for now. Get my margin back. Decent volume on this bar here for bearish momentum. So we'll see how this goes. Closes in 3 minutes. And then I'll make a decision from there. Unless this wants to keep going to the downside. I don't want to close it out too early, obviously, even though we're scalping. Catch as much downside as I possibly can. Is that OBV indicator public? Of course it is. That's just a standard OBV. I do it really simple. I use volume per bar. I use on balance volume. I use the SMI, and I use price structure. That's pretty much it. The rest is all volume. I'm going to blow my nose real quick. Let me see if I can mute my microphone. That way you guys don't have to hear this. It's great. All right. Sorry about that. Just kind of bear with me. Sorry that I'm sick and gross. I know that's not ideal, but I'm also getting an echo. My bathroom door in my office is open. It's actually kind of crazy that I've already been streaming for 41 minutes. Time flies when you're having fun, right? You're creeping down close to this liquidity yet? Ooh, we're getting there. It's getting a little closer. Getting just a little bit closer. There is a nice pocket here at 28,225. And I don't think that we snagged that yet. No, not quite. So I think that liquidity is going to end up getting snagged. So this will probably be a good point for me to be like taking half profit and or hedging long, which is probably what I'm going to end up doing. But again, I like to have candles close. This is like the first breaker candle that we had from our immediate higher low here. So I kind of want to see if we're going to break down through this support. I'll probably wait like one more candle before I make a decision, unless it like pops up immediately, in which case I'll just close. All right, new candle. Are we going to dump or are we going to moon? Make up your mind, order flow. Yeah, I like to be patient with these positions. That's why I don't trade on like the 5-minute or the 1-minute chart. It's just too crazy. Yeah, pretty much like 15-minute candles, or like, if I'm in a trade, I'll wait. Yeah, I'll wait like 2 candles or whatever. So I'm going to close half. Ooh. Maybe I'm not going to close half. I'll take a gander at the 5 minute just to see what the candles look like. That's a pretty strong, downtrend. It kind of makes sense that it's bouncing here. We broke these lows here. Yeah, I think this might end up seeing a continuation. I'm going to drop a long bid here at 28,225 where the support is. Going to open a market long here. I'm going to close. Close half my short. That way I can reladder higher. And if we pop here or whatever, just kind of play both sides. Both sides of the price action. I would love to get filled down here and then this thing just rockets. That would be like the ideal scenario, is like this bid gets filled. But if it just like nukes right through this, then obviously I'd be re-adding to this slowly, probably 0.005 at a time. Kind of regretting closing half of that short, but we'll see what happens. Let's see. So I got a question about the SMI indicator. So basically, if you go on TradingView, you just go to indicators, search, it's this one. So you just search SMI, it's the SMI ergodic oscillator. When I use this, I don't use it the way that it looks here. I normally just change this to a line. And then I add ranges at 0.15 and 0.2 on both sides. So 0.15 and 0.2, and then negative 0.15 and negative 0.2. And that's kind of the way that I use this thing. Again, works really well on the 15-minute chart. Higher time frames, you kind of got to mess with the settings for it to work better on that. Nice rejection from the top of this box here. That's looking good. I like it. I like it. I like it. So it is 1:30 Eastern time. So we got about, I guess, about an hour or so before it starts. I think they moved it and it said like 2:30 or something. Yeah, they moved it to 2:30. So they're running behind. I do not miss living there. I used to live in Virginia. I moved out here to Kansas City. It's way nicer. oil the beard up, it sounds like a dry cornfield. I actually do use beard oil. It does get a little dry. See how much liquidity we've taken here. It looks like the price action wants to snag some of this top side long liquidity here. Oh yeah, the yeah, the big whales, they're probably pissed. I'm not gonna lie. They're probably pissed off. I couldn't hear the cornfield. Yeah, the beard's been getting long. It's like kind of crazy long now. $28, that's not bad. Rerun this real quick. That's the only downside of this tool, is that like you kind of got to refresh it kind of often. It kind of not ideal, but it works. So yeah, like 22, 28.15. That's not that bad. I'm going to be trying, and I would really like for this to move lower, like on a wick, just so that I can catch and fill like a few more bids, so that I can get and play this to the top side. Because if you see here, this SMI, it's moving down to this bottom limit that I got. So that's why I ended up popping off a market long and just marketing in here. But sometimes what happens is it'll go down further on like a lot of volatility. It'll like spike down. And then even when it comes back up, it'll still be going down as the SMI is coming up. So it's kind of, I don't know, it's kind of hard to get used to using this indicator, but it works pretty well for scalping. It's good for like when it starts hitting these limits, that's normally when like I start scaling into a position, if that makes, like scaling in, not like, oh, it hit the first red line, let me go all in short, you know, like that's not how you should use any indicator. But I, as you guys can see, like I always ladder in and I always ladder out. That's just the way that I do it. Even when I'm scalping, even if I'm doing some kind of like straddling the market right here, where I'm long and short at the both, you know, at the same time. That's just the way that I run my stuff. So yeah, you know, these positions are probably going to balance each other out or whatever. But since we're kind of just floating in this range, the meeting hasn't started yet. You know, this is people taking profits before the FOMC. That's literally all this is. So I'm not really too worried about it. Got some more viewers in here now. Appreciate that. All of you guys that are newer, make sure that you like and subscribe. I stream every FOMC and I stream every Friday night, 8 p.m. Central Time. Check out the links in the description if you guys are interested in these charts from High Block Capital, the liquidity charts. If you guys have questions on those, by the way, like how to read them or something, let me know. You know, I can quickly explain that. We're kind of just hanging out here, you know, observing the price action, just doing a little scalping or whatever in the meantime, you know, before it starts. So just kind of hanging out. If there's charts that you guys want to see, if there's, you know, if you guys want my input on, you know, the banks or a certain commodity or a certain, I don't know, like just anything really. Yep. The OI did drop with price. Tyler is 100% correct on that. Typically, that is exactly what that means, where longs are going to be starting to cover. Same goes for the opposite. Yep. 100%. 100%. So it sounds like you probably have a little more experience trading If you were able to, figure out like, oh, okay, this means that longs are covering, you probably have a little more experience. That's good. Where do I see gold heading? Oh man, that's going to be interesting. Let's take a look at the gold chart here. Flip over to So I can see a nice area here. Right off the bat. Looks like for the most part, your top area is up here. This is a little throw over. Main resistance is here. Midline looks like it's at your consolidation here. So you've got a pretty nice horizontal range up here in the top. How much has this retraced? Perfect 382. This is probably a continuation from here. In my opinion, this moves up. This probably comes up again to retest at least 2000. You break this, and then it's going to end up going higher. Not a market mover, but I provide liquidity to allow retail to market buy, market sell on spot, basically. That's what we're all here for. We made a new yearly high. Yes, we did. That's this high here. Had a small pullback. Yeah, so the pullback, I mean, this is one move, right? Like, I mean, again, like I always start on higher time frames, right? So like this is one move. Okay. So like if you measure your low to your top here, you retrace between 0.382 and 0.5, that's valid for a wave two. So like if you're looking at this, in terms of Elliott wave or whatever, and you're counting your waves, you've got a 1, 2. It looks like this could be starting a wave 3. Okay, so this hit pi. Okay, so that's a super valid wave 3. And then on this lower 4-hour time frame, I said that this move here was retracing and it's 382. So yeah, this is good for another move higher. Now, if this is the bottom, what you'd be looking for in terms of targets, you'd just simply take, just to get a guesstimation here, just take your fib extension, measure that thing. Okay, if you're assuming that this is the bottom because it's 382 retracement, then you would be assuming, okay, if this is the start of a wave 3 and this is, wave 1 of 3, and this was your retracement 2, that means that you're looking for a wave 3 of a wave 3. That means that you're looking for probably, at least up here, right? Like 2050 would be like minimum. You'd be looking more up here, like 2100, 2150, 2200. So I think this has legs to go higher. If we look at a daily chart, it certainly looks like it does. This is getting pretty bullish up here, right? Looks like you've got a pretty notable spot up here. Okay, about 2030. That's your high. It's about 2100. So, there's obviously resistance up here, but if this is a true wave 3 of 3, then, this is going to have some serious legs on it and have a lot of room to be moving to the top side, in my opinion. That's gold. What's silver looking like? Silver just had a pretty big pullback. Nice consolidation here. Quick throw under. This is like a little fake out. I like that fake out there. Testing liquidity down there. That's nice. Perfect 618 golden pocket on the retracement. This was a perfect buy here. That's why it had such a nice reaction. That was a really good buy. So if anybody got into silver right at 20 bucks, kudos. That was a sick play. Really, really nice catch. I clearly missed this, but that was a really good play. I should have been paying attention to that. I saw it when it was here and I was like, oh man, I need to wait for it to go lower. And then I didn't set any alerts and I missed it. So that kind of sucks. So again, if we're looking for higher on silver too, just to get a guesstimation. Again, I don't trade off of fibs, right? Okay, like it's dumb to trade off of like one thing. You got to use everything. I just use fibs to like figure out like, okay, like where is, if I'm expecting this to continue, where am I expecting it to continue to? Or if I'm, in either direction, it doesn't matter. You can use this to the downside too. Like if you're bearish here on silver and you're playing the downside, you'd simply measure it like this instead and say, oh, okay, the top is probably, like 23.25 or whatever. And you'd be looking for downside down to like $17 or something. But, if I'm bullish on silver, I would be simply measuring it the opposite direction and be saying, oh, okay, well, I'm expecting, $25. Okay. Like this golden pocket up here, I'd be expecting certainly a retest of these highs and then potentially higher at $25 minimum. So clearly you have a nice, pretty well-defined resistance up here as well. Okay. That's just kind of how I do my stuff. The majority of it is price action. This is literally a perfect midline, and it's like testing this midline right now. That's actually quite interesting. Looks like Australian US dollar is consolidating. Pound dollar this looked like it was kind of flagging here. Maybe this was a breakout. Yeah, so it wedged here and this just broke out on the daily. That's nice. Euro USD, pretty much the same thing here. Looks like it's breaking through small resistance. I mean, if you guys don't want to be looking at legacy because you guys think it's boring or you guys don't trade Forex like I do, that's cool. You guys can totally tell me to chart something else. I'm kind of just going through my list, and I'm obviously not going to go through this whole thing, but like this is like my main stock list. I've got everything separated by sectors. So I've got, just to give you an idea of how I have my watch list laid out. I've got services here, and then I've got consumer stuff here. I've got industrial and manufacturing, communications like cell phone providers like T-Mobile obviously is in there, Verizon. Financial stocks. So this is like all the banks, stuff like that, like brokerages and banks and stuff like that. And then in here, I've got all tech, your Apple, AMDs, NVIDIAs, and all of that good stuff. And then this is just like a couple Forex pairings. I keep my eye on the 2-year and the 10-year yield. And then, this is like commodities. So, like soy, wheat, corn, silver, gold, copper, oil, and then your indexes up here, right? So like this is your Russell E-mini. This is your S&P 2000 or 500 or whatever. Then you've got your Dow Jones. Like that's just kind of how like I organize my watch list. I'm pretty sure that this watch list is public. I think it's public. I don't know how do I check that? No. Share list. Yeah, so I'll post this here in the chat for you guys if you guys want to look at the list. That's the watch list that I use for stocks. Forex. Forex I trade on Owanda, so all of my pairings are here as well. I'm pretty sure that this one is also public, so I'll share my Forex watch list with you guys too if you want. You guys can take these watch lists. They're free. They're open to the public. And then, of course, I've got like my altcoin list. This, for the most part, is just like your normal altcoins. Okay, like most of these are not shit coins. Like obviously, like Doge. Obviously, that's a shit coin, right? But like most of these are like, you're good like layer 2s and stuff. I mean, just from scanning this real quickly, you can tell, right? Like 1inch, Avi, ADA, Algo, APT, AVAX, Blur, BNB. It's like your like your layer 1 and layer 2 chain stuff. And then my main, which is just like BLX, the CME. This is another reason why I'm kind of hoping that this continues short here is I'm really looking for this gap right here to be filling. Okay. So if we narrow this down on a 15-minute, actually on a 1 hour, it looks like on a 1 hour, we did fill part of this gap here. Yeah, we did on the 4 hour too. So, I mean, this spot for me is still in play here for Bitcoin futures. That's still in play. Always be mindful of your gaps, right? Like we've got another gap here, so like be mindful of those gaps. I normally chart those on the daily. Okay. So got a gap here, got a gap here. This gap, this is a carryover from this gap. It got partially filled. I do not count wicks as a fill for a gap. Offers a decent API for US traders. I mean, I trade Forex through Oanda directly on TradingView. I would say that their API is good. For everything else, I use interactive brokers. No RefLink or anything, but yeah, I use interactive brokers. Their app and their API is also really, really good. Check on these positions real quick. Looks like both of these are even. Man, I really sound like garbage today. All right, looks like we closed the doji here. Looks like it wants more, so I'm just going to close out of the short. Or am I? Yeah, I'll close out of it. Going to close out of the short here. I think that this probably ends up moving a little bit higher to the top side first. This is just like your right before FOMC volatility. So I just double down on my position. Hopefully this doesn't just like reject on me immediately. That would be kind of crappy. I don't sound that bad. Echoes when tinnitus flares up. Oof, that's the worst. Aw. No, keep going. See what happens. This candle closes in 5 minutes. This is probably going to end up seeing at least a retest of here. I would be expecting this to be breaking back through, but let's check the liquidity and find out. Yeah, I mean, there's still all of this liquidity sitting up here. It starts at 28,750, so it's not too much higher. It's right here about like these highs. So those highs break. This is gonna, I mean, if we break these highs with solid volume, I mean, this is just gonna like really, really continue. But there is a lot of selling pressure here, so we'll have to see. Let's see what happens. Maybe my SMI fakes me out this time and keeps moving to the downside. For those of you just joining us, I can see the viewers like slowly increasing over time. Make sure you like and subscribe to the channel. I stream every Friday night at 8 p.m. Central Time, 9 p.m. Eastern. We do a little beer and whiskey and charting, talking markets. And I stream in live scalp every FOMC. I really wish that I could have been like trading with a bigger stack with this for you guys, but I just don't feel comfortable doing that with so much uncertainty around this particular meeting. That's why it's only like $300. I'm using really tiny positions here, especially before the FOMC actually starts. So, am I going to be like that Korean guy on YouTube that's trading with like, $3 million stacks and $3 million positions and just, oh yeah, well, it doesn't matter. I just lost $3 million. Like, no, I'm not. I would never trade with that much money on leverage. That guy is insane. He literally throws money away. Like, that's literally throwing money away. Like, if you really have that much money, it's just like, oh yeah, no big deal. I just got liquidated on a $10 million position. It's like, can you send me $5 million instead of just getting liquidated? Like, damn. Yeah, so a smaller amount on this. It's just a little Bybit account or whatever. Sato 1 million short liquidation is 29,061. Oh, we're definitely liquidating him. Dude, thanks for telling me that. Oh man, I'm about to double down on this position right now. Can you yeah, I wish I could like keep an eye on him. He's like the perfect contra indicator because he trades on Bybit, or I'm pretty sure he does, and he always gets hunted. He always gets hunted. It's so funny. He's like the perfect contra indicator. So if he's short right now, I definitely want to be long because I know that he's going to get liquidated. And then it's going to pop up further than there. So if his liquidation is just over 29,000, to fill that, it's going to sweep some of the books. It should wick there either way. Yeah, I honestly, like, I kind of think it will wick there either way. Almost always. It's one of those things in the market. We're probably close to, it's super absurd. Like, that guy, whenever he's trading, I'm about to just double down on this. Let's keep it going here. This is going to keep running. I guarantee you that guy gets liquidated. There's a lot of activity on the tape right now. This is getting a little interesting here. 1.5 billion liquidations at 29. Damn. That is a lot. I mean, if this does move lower, like I'll gladly, scale a little bit out or whatever and then add back deeper. That's totally fine with me. I mean, this is a pretty good bounce. I like that doji candle on the 15-minute chart. Let's see what the 1 hour looks like. Oh yeah, it's a huge wick to the downside. Sometimes these end up getting filled though, so I'm gonna have to be careful on this 1 hour chart. But it looks like the bulls are trying to fight back here. It looks like they don't want it to close a bearish engulfing, but I don't think if they're gonna get that here, they need to really pump some volume into this with the last 20 seconds. $1.5 billion liquidations at 29. Let's look. This is BitMEX, Bybit, and Binance. I mean, yeah, with all of this combined, I'd say, yeah, probably about that. Close. Because if you look over here, that's pretty much what it says. Holy crap. Looks like he's going to get liquidated today, huh, boys? Let's go. All right, there we go. It's pumping. Dun da da da. So is this like right as the FOMC is starting? Of course. Okay, so I'm going to get set up here. We're getting all of the volatility right now. Oh, are you serious right now? Did that really just happen? That's insane. I wonder if I should just leave this open or not. That's nuts. Give me 1 second, guys. Okay, let's mute that and bring this up. There we go. All right. Well, that went poorly all of a sudden. It just like grabbed both liquidity, like on both sides, just like I said it would. But I'm like stuck in this short now, which kind of fucking, or this long, which kind of blows. So I think what I'm going to do is I'm going to close 0.15 of this here. And I'm going to look to add lower. And see what happens. Because I personally, I think that this is going to keep going up here. That's what it looks like is going to end up happening. I think we're going to move up. Darth Maul, baby. Yeah, basically. That is pretty much what is happening. If you guys can do me a favor just before this FOMC starts, we got about 15, 20 minutes before it starts. Make sure that the Twitter post that I put out, if you guys could like and just retweet this, I highly appreciate it. Let's get some more people in here and have some fun. I'll go ahead and copy and paste this so it's a little easier for you guys. Go ahead, share that link, share that tweet or whatever, do your thing. Be cool to get some extra people in here. And I'm going to be explaining stuff as he goes along. So if there's anything that I know for certain that you guys wouldn't know, then I'm going to go over that stuff. You retweet all my stuff off the rip. Hey, man, I appreciate that, Tyler. Thank you. That's awesome. Look at the dollar. What's going on with the dollar? Is the dollar going crazy? Holy crap, the dollar's nuking. Holy shit. Oh my God. Yeah, this is a pretty critical level of support here. This breaks, it's definitely not good. Yeah, the dollar is just absolutely nuking. That's insane. Oh, by the way, just real quickly, let me know, like, you guys should be able to hear, please confirm that you guys can hear the audio from this. Because if you don't, then I need to fix that real quickly, like, because we're going to start soon. Let me know if you can hear the music. Or if it's too loud, too quiet, or whatever. Just help me out there a little bit. Yeah, the dollar is absolutely nuking. That is so insane. So for you guys that don't know, the dollar going down means that everything else is going to go up. So there is that. Nuts. Yeah, that's pumping hard. Okay, so you guys cannot hear. I just had a couple people tell me that they can't hear this audio. Okay, let me know if you guys can hear it now. That should fix it. Of course, just as I do that, like the music freaking stops. But yeah, you guys should be able to hear it now. It should be fine. It's just music right now, so I'm gonna like keep it in the background. Okay, Austin confirmed that it's fixed. Perfect. Cool. Yeah, so I have an audio interface, so like I have to do all of my audio with this. So there's like, it's a thing. And then I can control the everything individually from here as well, which is kind of cool. All right, cool. Yeah, as long as you guys can hear it, that's fine. That's all I need to know. It's like elevator music too. Yeah, that's a huge Darth Maul in both directions. I think that it moves up, and I think we liquidate what's his face that YOLO was saying. What's his face, the guy that always does like crazy humongo positions, unless he already got wicked out. I wonder what his short entry is from. It's probably from like a lot lower. It's probably like 28 or 28.2 or something. Okay, so I'm gonna close half of this position here. I think I'm gonna get a chance to get back in lower. Sato, yeah. Soft sounds to get wrecked to. I like that. Soft sounds to get wrecked to. Yeah, that's basically. I'm gonna have a long and a short from the exact same spot and see what happens. Like I'm just literally gonna play both sides of this and just say screw it. 28,666 is his entry. Oh man, that's actually a solid entry for a short. He literally nailed like the Pico top. But he's definitely gonna get liquidated. A short overview of what we can expect when the interest stays the same or when it goes higher, or is there a chance for it to drop? So are you talking about like him actually raising rates? I mean, with the banks and everything, that's just, if he continues to raise rates, that's just going to be putting more pressure on the banks. So typically that's not a good thing. We know that banks, as part of their balance sheet, hold a lot of mortgage-backed securities. The fuck? What is it? Oh my God, stop. Stupid. Nice. Austin over in the Cardinal House Discord is absolutely crushing it on his pre-FOMC trading. Kudos to him for that. Let me know if I can like flash that up on my, well, I kind of did already, but I took it off immediately. Sorry if you didn't want me to do that, by the way. Oops. But yeah, that's like really solid. Like you did really good. You just made a couple of hundos. It's not bad, man. Not bad at all. If this is just going to keep Darth Mauling this is exactly why I'm just going to sit on both sides of the price action. Like there's no reason for me not to. If we're just going to be Darth Mauling in this fucking candle for the next 45 minutes during this speech, there's absolutely no reason for me to just play both sides of this. Soft sounds to get wrecked to. Cobra Trading will protect you. It's cool hanging out with you guys, man. I appreciate it. Appreciate the love and support as always. Just another day in the crypto sphere. Trading legacy. I mean, see, here's the thing. Like everybody hates on the legacy stuff. And that always confused me because like I came from legacy. I've got 12 years under my belt of trading. And it's like I started in futures and commodities, and I went to Forex. And then in 2017, like early 2017, I found crypto. So I started focusing mostly on that. I don't know. But everybody like hates on legacy. It's like, oh, the crypto traders are watching the FOMC. It's like, well, yeah, of course. The FOMC moves markets. The FOMC invokes emotions that move the market. So it's like, you know, yeah, this is just really back and forth here on this 15-minute. Oh my God, look at that 15-minute candle. What the fuck? That's insane. Should I really be doing this on a 1 minute time frame right now? I really don't want to. Like I can't tell you how much I would love to not do this on a 1 minute time frame. I'm okay with this 15-minute time frame. This is gonna close as an inside bar, but that's, or maybe not. There's so much volatility on the tape right now. It's like it's just moving so quickly back and forth in both directions. That's why these days are so good to trade. Like you have to wait. Like I think that's probably my biggest word of advice is like if you're trying to trade like this right now, you have to wait for candle closes. Like you have to wait for confirmations. It doesn't matter how volatile it is and how much you see your position go red or green. You have to wait for candle closes to make a decision. 100%. Austin's never heard of the Darth Maul candle before today. Yeah, Darth Maul is like no joke. Darth Maul is literally this candle right here. It's like, it looks like his lightsaber, right? So he's got like the middle part where with the handle, and then in both sides, there's a lightsaber that comes out on both sides. That's literally this candle. That's why it's called a Darth Maul candle. 1 second charts? Absolutely not. Yeah, see, this is why we wait for confirmation. So like, and even still with this like crazy Darth Maul candle, like the FOMC hasn't even begun yet. Like I don't even want to know how this 1 hour candle is going to end up looking. Like you guys know that this is about to get freaking crazy bonkers in like 15 minutes. Like this is just the beginning of it. That's pre-FOMC people just closing. Federal Reserve hikes rates up by 25 basis points despite banking turmoil. Is that a headline? I guess that's a headline. I haven't seen that. I haven't really like looked around on Twitter. Appreciate you. Big old dump. Headlines. Fed. The banking system in the United States is sound and resilient. What the fuck? No. Quit lying to us. Like that doesn't look resilient to me when you increase your balance sheet by $300 billion. It doesn't look sound. They're just trying to prevent a run on the bank. Like, let's get serious. They're just trying to prevent a run. You just see people hunting stops. Candle bodies just consolidating while the wicks are going insane. Yeah, basically. Home for lunch. I'm on the TV. Oh snap. That's what's up. Yeah, I always forget like the YouTube apps like on the TVs and stuff. I want this to like make up its mind so that it'll move. Like so far it's just been like I knew I should have closed on that. I should have closed that long when I was like massively in the profit there. I knew I should have done that and just taken the profit and immediately shorted. But I wasn't fast enough. I was like, oh, it's gonna keep going. I know better. That was a stupid mistake on my part. It's because I'm sick. I'm like not on my A game today, guys. Kind of sucks. I sound like garbage. Sorry. It is what it is. Caught it from my wife. My daughter was sick. First, my daughter had pink eye, then she got sick. My wife didn't get pink eye. I didn't get pink eye. But then my daughter got sick, gave it to my wife, and then she gave it to me. So, awesome. Are we gonna move or what's going on here? Soft sounds to get wrecked to, featuring Kamala Harris. If you guys ever watch any of the like conservative YouTubes, like Blaze, they have like a funny thing. It's like Veep thoughts with Kamala Harris. It's like the funniest fucking thing. Oh my God. I'm like straddling the very center of the price action. This is like not opportune. I'm honestly like kind of embarrassed that I got myself stuck in this situation, like right in the very center of the price action. This is not where you want to be. Like normally if you're straddling, you want like, you know, you're short from the top and you're long from the bottom. I'm like smack dab in the middle. This is incorrect. Like I fucked this up. I'm not going to lie to you. It's kind of bad that I'm like right smack in the middle of the price action. This is not where I want to be because then I can get wrecked on both sides instead of like, okay, so for right now, come on. Okay, there. I'm just going to pick one side. I'm going to pick the long side from here and hopefully it goes up from here. If not, then I'll close and I'll get one of these extremes from this wick because that's not where I want to be. I don't want to have both sides of the position open right there in the center. That sucks. Yeah, that's what I'm hoping for. I shouldn't have opened the position right on top of the other one. That was freaking stupid. I wasn't thinking. Got to get my A game. Got to get my game face on. It's about to, the volatility is about to be insane. Yeah, no, I don't. Yeah, it's totally cool. I mean, I just don't want to have both my positions right in the heart of the candle bodies. That's not the spot. Definitely not the spot to be in, especially like right before it starts. I really wish that I would get like one more quick dip in like 10 minutes, like either a dip or a pop, like it doesn't matter, like before the FOMC starts so I can better position myself. That was really freaking stupid of me to open it right here. Oh yeah. For like most of my swing trades end up going that long. One day I'll get out, just leave them open for like a month. They're just underwater for a month. I have done that. That's happened to me before. Not in crypto because I always try to cut the losses quick. But that happened to me one time in Forex. I was like really underwater on yen USD, and it was like I was like, I know it's gonna come back. I know it's gonna come back. It didn't come back for like a month, so I closed half of it at break even, and then that actually ended up I let it keep running, and that actually ended up being one of my biggest winners that year. That was the same year. It was 2020. That was the same year that oil traded negative, and I bought WTI, like, you know, Whitico crude or whatever. I bought Whitico crude oil ETF at like $2.65. And I bought like, it wasn't a lot of them. Like, I wish I would have gone heavier, but I bought like 100 of them or whatever it was. I literally left the position open because I had a reverse split and it immediately came back up to like $20 a barrel. I was already up like 200%, and I was just like, fuck it. I'm not going to sell it until oil goes back to 100. It took like about a year, but I was like one of the biggest trades. That was like one of the biggest winners that I've ever taken, was that oil trade. I got really lucky. I happened to be looking at the charts right when oil was doing that, and I got really, really, really lucky. Yeah, I mean, so they're doing 25 basis points, so that's obviously what the volatility there was. If he says anything about injecting more money or saving more banks, I can almost promise you that this is going to keep going. All right, I'm going to reposition the long. I'm just going to throw some limits down. I'm tired of this. Just cut both of them. Start positioning myself over again. It's fine. Music to Get Wrecked To by Kamala Harris. All right. Which way is it going to go, boys? Which way, Western man? Which way, Western man? Which way are we going to go? Let's do it. 27,650. Ooh, that's deep. That's like way down. We're gonna do right like 28K though. Okay. That's how it should be done. But one of these, like, that's how I should have done it at the beginning. I was actually in a short from up here before I started the stream, and then I exited it because I wanted to start over and do it like completely on the stream. I should have just stayed in the fucking short from here. But whatever. It's all good. Oof, oh my God. What did this OBV do? What happened? Yeah, see the dollar is starting to move back up a little bit. We'll see what happens. How about this OBV? It's like stuck in the middle. It's like retesting these highs. That's consistent with the price action for the most part, so I'm not really too concerned with that. On the 15-minute though, it looked wild. Yeah, it looks wild. That's insane. Retesting these highs. Yeah, it did on the wick. So this is still consistent too. Lower lows, lower highs, lower lows, lower highs on the OBV. So this all looks pretty normal. Now this is moving into bearish territory. So this might get like one more pop. But I think this is probably we're gonna see divergence on this. Like if this pops up, we're gonna see divergence here. That's where it's gonna form on the 15-minute. So that'll be prime for a scalp. But if the announcement has pretty much already been made and he's just gonna read his little thing and then do the press conference, the only thing from here that's gonna move the market is gonna be the press conference. I said I'm gonna stream through that, so that's what we're gonna do. We've been live for almost 2 hours, so it'll be maybe another hour, and then I'm gonna call it quits, eat a late lunch, and then I told you guys I gotta get my website up. I gotta finish my website. I'm launching that on Monday. I'm gonna be working on that today, tomorrow. During the day, tomorrow night a live stream, so like and subscribe. Tomorrow night 8 p.m. live stream, and then I'm also gonna be finishing it up on the weekend, launching that on Monday. So new website on Monday. It's been a long time coming. God, I sound like garbage. I'm so sorry that I'm sick, guys. Sounds so terrible. Oh my goodness. Sorry. That's so gross. Every time I've had to get up and blow my nose, I notice that there's like 1 or 2 people that like drop out of the stream because it's so nasty. Sorry. I mean, I don't have COVID or anything, just a cold. Dollar dropped because of the 25% rise. To be honest, I'm not really sure I mean, the dollar is just dropping because it's debased as shit. Yes, basically. That would be the reason why the dollar dropped like that today. But in general, I mean, oh, here we go. I really don't want to pick a side here from the freaking middle. I picked a side from the middle. I don't care. It's just a little $300 account. I don't give a shit. So it doesn't matter. All right, here we go. Let's do this thing. Are we doing it or what?
Good afternoon. Before discussing today's meeting, let me briefly address recent developments in the banking sector. In the past 2 weeks, serious difficulties at a small number of banks have emerged. History has shown that isolated banking problems, if left unaddressed, can undermine confidence in healthy banks and threaten the ability of the banking system as a whole to play its vital role in supporting the savings and credit needs of households and businesses. That is why, in response to these events, the Federal Reserve, working with the Treasury Department and the FDIC, took decisive actions to protect the U.S. economy and to strengthen public confidence in our banking system. These actions demonstrate that all depositors' savings and the banking system are safe. With the support of the Treasury, the Federal Reserve Board created the Bank Term Funding Program to ensure that banks that hold safe and liquid assets can, if needed, borrow reserves against those assets at par. This program, along with our long-standing discount window, is effectively meeting the unusual funding needs that some banks have faced and makes clear that ample liquidity in the system is available. Our banking system is sound and resilient with strong capital and liquidity. We will continue to closely monitor conditions in the banking system and are prepared to use all of our tools as needed to keep it safe and sound.
Yeah, those
In
money
addition,
printers.
we are committed to learning the lessons from this episode and to work to prevent events like this from happening again. Turning to the broader economy and monetary policy, inflation remains too high and the labor market continues to be very tight. My colleagues and I understand the hardship that high inflation is causing, and we remain strongly committed to bringing inflation back down to our 2% goal. Price stability is the responsibility of the Federal Reserve. Without price stability, the economy does not work for anyone. In particular, without price stability, we will not achieve a sustained period of strong labor market conditions that benefit all. The U.S. economy slowed significantly last year, with real GDP rising at a below-trend pace of 0.9%. Consumer spending appears to have picked up this quarter, although some of that strength may reflect the effects of swings in the weather across the turn of the year. In contrast, activity in the housing sector remains weak, largely reflecting higher mortgage rates. Higher interest rates and slower output growth also appear to be weighing on business fixed investment. Committee participants generally expect subdued growth to continue. As shown in our summary of economic projections,
There's the dot
median
plot.
projection for real GDP growth stands at just 0.4% this year and 1.2% next year, well below the median estimate of the longer-run normal growth rate. And nearly all participants see the risks to GDP growth as weighted to the downside. Yet the labor market remains extremely tight. Job gains have picked up in recent months, with employment rising by an average of 351,000 jobs per month over the last 3 months. The unemployment rate remained low in February at 3.6%.
That's
The
so
labor force
low.
participation rate has edged up in recent months, and wage growth has shown some signs of easing. However,
That's
with
not good.
job vacancies still very high, labor demand substantially exceeds the supply of available workers.
That's so
FOMC
bad.
participants expect supply and demand conditions in the labor market to come into better balance over time, easing upward pressures on wages and prices. The median unemployment rate projection in the SEP rises to 4.5% at the end of this year and 4.6% at the end of next year. Inflation remains well above our longer-run goal of 2%. Over the 12 months ending in January, total PCE prices rose 5.4%, excluding the volatile food and energy categories. Excluding those, core PCE prices rose 4.7%. In February, the 12-month change in the CPI came in at 6%, and the change in the core CPI was 5.5%. Inflation has moderated somewhat since the middle of last year, but the strength of these recent readings indicates that inflation pressures continue to run high. The median projection in the SEP for total PCE inflation is 3.3% for this year, 2.5% next year, and 2.1% in 2025. The process of getting inflation back down to 2% has a long way to go and is likely to be bumpy. Despite elevated inflation, longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. We are highly attentive to the risks that high inflation poses to both sides of our mandate, and we are strongly committed to returning inflation to our 2% objective. At today's meeting, the committee raised the target range for the federal funds rate by a quarter percentage point, bringing the target range to 4.75% to 5%. And we are continuing the process of significantly reducing our securities holdings. Since our previous FOMC meeting, economic indicators have generally come in stronger than expected, demonstrating greater momentum in economic activity and inflation. We believe, however, that events in the banking system over the past 2 weeks are likely to result in tighter credit conditions for households and businesses, which would in turn affect economic outcomes. It is too soon to determine the extent of these effects, and therefore too soon to tell how monetary policy should respond. As a result, we no longer state that we anticipate that ongoing rate increases will be appropriate to quell inflation. Instead, we now anticipate that some additional policy firming may be appropriate. We will closely monitor incoming data and carefully assess the actual and expected effects of tighter credit conditions on economic activity, the labor market, and inflation. And our policy decisions will reflect that assessment. In our SEP, each FOMC participant wrote down an appropriate path for the federal funds rate based on what that participant judges to be the most likely scenario going forward.
Yeah, they're going to cut, obviously. They're going to start cutting.
Evolves as projected, the median participant projects that the appropriate level of the federal funds rate will be 5.1% at the end of this year, 4.3% at the end of 2024.
Yeah, they're going to start cutting.
1% at the end of
That's super bullish. I can't believe if you guys saw that on my screen, it literally came right down to here, did not trigger my entry, and then took off without me. How shitty is that? I can't believe that just happened.
For policy will adjust as appropriate.
My average entry would be below 28K right now. I'm kind of pissed off about that.
Our meeting decisions.
Maybe I'll get another chance here.
Of the incoming data and their implications for the outlook for economic activity and inflation. We remain committed to bringing inflation back down to our 2% goal and to keep longer-term inflation expectations well anchored. Reducing inflation is likely to require a period of below-trend growth and some softening in labor market conditions. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the longer run. To conclude, we understand that our actions affect communities, families, and businesses.
Oh my God, yes, it's the same fucking paragraph at the end of every FOMC. We understand that our decisions affect everyday people.
Maximum employment and price stability goals. Thank you. I look forward to your questions.
All right, here we go. Meat and potatoes.
Thank you. Colby Smith with the Financial Times. How confident is the committee that the recent stress that we've seen and you've alluded to is contained at this point, and that deposit flight among mid-sized lenders in particular has ceased?
Thanks. So I guess our view is that the banking system is sound and it's resilient. It's got strong capital and liquidity. We took powerful actions with Treasury and the FDIC, which demonstrate that all depositors' savings are safe and that the banking system is safe. Deposit flows in the banking system have stabilized over the last week. And the last thing I'll say is that we're undertaking a thorough internal review that will identify where we can strengthen supervision and regulation.
Okay, just a quick follow-up. I mean, given all of the stress and the uncertainty that you've also alluded to in the statement, how seriously was a pause considered for this meeting?
So we did consider that in the days running up to the meeting, and you see the decision that we made, which I'll say a couple things about. First, it was supported by a very strong consensus, and I'll be happy to explain why. And really it is that the intermeeting data on inflation and the labor market came in stronger than expected. And really before the recent events, we were clearly on track to continue with ongoing rate hikes. In fact, as of a couple of weeks ago, it looked like we'd need to raise rates over the course of the year, more than we'd expected at the time of the SCP in December, the time of the December meeting. We are committed to restoring price stability, and all of the evidence says that the public has confidence that we will do so, that we'll bring inflation down to 2% over time. It is important that we sustain that confidence with our actions as well as our words. So we also assess, as I mentioned, that the events of the last 2 weeks are likely to result in some tightening of credit conditions for households and businesses, and thereby weigh on demand, on the labor market, and on inflation. Such a tightening in financial conditions would work in the same direction as rate tightening. In principle, as a matter of fact, you can think of it as being the equivalent of a rate hike, or perhaps more than that. Of course, it's not possible to make that assessment today with any precision whatsoever. So our decision was to move ahead with a 25 basis point hike and to change our guidance, as I mentioned, from ongoing hikes to some additional hikes, maybe some policy firming may be appropriate. So going forward, as I mentioned, in assessing the need for further hikes, we'll be focused, as always, on the incoming data and the evolving outlook, and in particular on our assessment of the actual and expected effects of credit tightening.
Nah, he's being dovish. They're going to start cutting.
Mr. Chairman, can you explain
Worst
the
case
difference
scenario, he
between ongoing
pauses.
rate increases and firming? Does firming imply a rate increase per se, or could policy firm without you increasing rates?
No, I think it's meant to refer to our policy rate. Really, I would focus on the words may and some, as opposed to ongoing. So we clearly were, what we were doing there was taking on board trying to reflect the uncertainty about what will happen. I mean, it's possible that this will turn out to have very modest effects. These events will turn out to be very, very modest effects on the economy, in which case, and inflation will continue to be strong, in which case, the path might look different. It's also possible that this potential tightening will contribute significant tightening in credit conditions over time, and in principle, if that means that monetary policy may have less.
So basically, he's saying either the bank's busting and all of this shit going on is already gonna start helping to contributing to lowering inflation,
with our
or it's
monetary
not.
policy,
And if
we're
it doesn't,
really
then they're gonna
focused
keep
on
hiking rates.
macroeconomic outcomes. In particular, we're focused on this potential credit tightening and what can that produce in the way of tighter credit conditions. I think when we think about the situation in the banks, we're focused on our financial stability tools, in particular our lending facilities, the discount window, and also the new facility.
Nick?
Nick Timmeros of the Wall Street Journal. Chair Powell, in your testimony 2 weeks ago, you had indicated you thought the terminal rate would be higher. Obviously, that was before the stress in the banking sector. And I realize there's a lot of uncertainty, but can you explain at all to what extent your forecasts or those of your colleagues or those of the board staff incorporated today a material tightening of credit availability because of the stress in the banking sector, or are you waiting to see it in the data before you incorporate that potential?
He literally just said at the end of his
we just come from an
speech
FOMC meeting,
that
and
it's ongoing
the
data.
The minutes will be very carefully counting, but I'll tell you what I heard. What I heard was a significant number of people saying that they anticipated there would be some tightening of credit conditions, and that would really have the same effects as our policies do, and that therefore they were including that in their assessment, and that if that turned out not to be the case, that in principle you'd need more rate hikes. So some people did reflect that in their SCP forecasts. I think there may also just have been, remember, this is 12 days ago. We're trying to assess something that just is so recent, and it's very difficult. There's so much uncertainty. So December was a good place to start, and we wound up with very similar outcomes for December. And in a way, the data in the first 5 weeks of the intermeeting period pointed to stronger inflation.
See how he's rambling? He's not trying to take very many questions. He's rambling. He wants to keep it to like one or, like probably five questions. So he's like going into useless detail that he's already talked about in his answers to avoid having a shit ton of questions.
Sustain the kind of tighter financial conditions that you believe will be necessary without doing significant damage to the banking sector? Have you, for example, considered changing reserve requirements, selling assets out of the system, open market account, as a way to better achieve tighter financial conditions that don't accelerate deposit erosion, for example, from banks?
Dude, they're not going to start selling bonds.
We know that we have other tools in effect, but no, we think our monetary policy tool works, and we think, many banks.
No one's going to want them anymore now.
Our rate hikes were
rates dropped.
Well telegraphed to the market, and many banks have managed to handle them.
Victoria.
Hi, Victoria Guida with Politico. I wanted to ask, you, along with the FDIC and the Treasury, the Fed Board decided to invoke the systemic risk exception to allow uninsured depositors to be protected at these two banks. And I was just wondering if you could speak to why that decision was made. Was it purely a confidence issue, or was there a concern that there would be some sort of economic contagion or financial contagion from the failure of these
That's
banks?
a fantastic question.
The issue was really not about those specific banks, but about the risk of a contagion to other banks and to the
Other
financial
banks.
markets more broadly. That was the issue.
Okay, and then can you also, just to follow up, can you speak to the role that you will be playing in the Fed's internal investigation on its supervision and regulation?
So Vice Chair Barr is of course leading that review.
Yeah.
And he's responsible for it in his capacity as Vice Chair for Supervision. I realized right away that there was going to be a need for a review. I mean, the question we were all asking ourselves over that.
Here we
first
go. It
weekend,
looks
how
like
did
we're
this
going to
happen?
liquidate the boys to the top side.
so,
I'm so pissed that I didn't
what we
get
did
filled on my
was,
other limit down here.
early
Those of
Monday
you guys that
morning,
have
we
been
sat down
watching
and
the
said,
stream,
"Let's do
you
this."
guys
And
saw me
he's
place these
obviously gonna
bids
lead it in his
and saw the
capacity.
price action
So
come all the way
I
down
don't-
in my bid and see it not trigger.
My role was to
I'm disappointed.
announce it.
I would
And,
have double the position
I get
size,
briefed
and I
on it,
would
but I'm
have
not involved in the
a
work
lot
of it.
better of an entry.
Howard.
Kind of sucks, but whatever.
Hi, Chair Powell, Howard Schneider from Reuters. So I want to go back to your February press conference.
Reuters.
You mentioned the word disinflation, I believe, 9 or 10 times, a process that you felt was, I forget the word you used, but gratefully underway or something like that. Is disinflation still occurring in the U.S. today?
Yes,
No.
I mean, what actually happened, Howard, was I got the question 12 times. So maybe it's a
Okay.
feature, not a bug.
He
But,
has to say yes, but the
so-
answer is no.
but yeah, absolutely.
Like, that's why even he's
Absolutely
laughing.
the story is intact. So it's really three parts, right? Goods inflation's been coming down now for 6 months. It's proceeding more slowly than we would have liked, but it's certainly proceeding. Housing services is really a matter of time passing. We continue to see the new leases being signed at much lower levels of inflation. So that's 44%.
Yeah, no one's
of the-
buying houses right
the
now
core
because nobody
PCE
wants to buy a house
index
when they
where
could have
you've
bought
got
a house
story
at
that's
2%
ongoing.
interest. Nobody
What
wants
we
it for
didn't have
6.
in February, and we still don't have
It's triple.
now, is a sign of progress in the non-housing services sector, and that is, that's just something that will have to come through softening demand, and perhaps some softening in labor market conditions. We don't see that yet, and that's of course 56% of the index. So the story is pretty much the same. I will say that the inflation data that we got, to your point, really pointed to stronger inflation.
If I could follow up on that, I was curious why you don't see more coming from the credit crunch, because it seems to me that's something that you'd actually welcome to a degree and expect. And are you not seeing more
think
coming
the
from
guy that was
because
short
you don't know, or because
closed
you
out.
just don't want to have another
Or he got
round of wishful
liquidated
thinking?
already.
So it's really just a question of not knowing at this point. There's a great deal of literature on the connection between tighter credit conditions, economic activity, hiring, and inflation. Very large body of literature. The question is, how significant will this credit tightening be, and how sustained will it be? That's the issue. And we don't really see it yet. It's so people are making estimates, people are publishing estimates, and it's very kind of rule of thumb guesswork almost at this point. But we think it's potentially quite real, and that argues for being alert as we go forward, as we think about further rate hikes. For us, we'll be paying attention to the actual and expected effects from that.
Gina.
Hi, Chair Powell. Gina Smilik from the New York Times. Thank you for taking our questions. I wonder if you could talk a little bit, I know that you've got your internal review coming, but I wonder if you could talk a little bit about what you think happened with oversight at Silicon Valley Bank and whether this suggests that something about regulation and supervision needs to actually change going forward. And I wonder, how can the American people have confidence that there aren't other weaknesses out there in the banking system, given that this one got missed, as you noted?
So let me say what I think happened, and then I'll come to the questions around supervision. So at a basic level, Silicon Valley Bank management failed badly. They grew the bank very quickly. They exposed the bank to significant liquidity risk and interest rate risk, didn't hedge that risk. We now know that supervisors saw these risks and intervened. We know that the public saw all this. We know that SVB experienced an unprecedentedly rapid and massive bank run. So this is a very large group of connected depositors, concentrated group of connected depositors, and a very, very fast run, faster than the historical record would suggest. So for us, for our part, we're doing a review of supervision and regulation. My only interest is that we identify what went wrong here. How did this happen is the question. What went wrong? Try to find that. We will find that. And then make an assessment of what are the right policies to put in place so that it doesn't happen again, and then implement those policies. It would be inappropriate for me at this stage to offer my views on what the answers might be. I simply can't do that. Vice Chair Barr is leading this, and I think he's testifying next week.
Wow, so he's just going to dump everything on Barr so that he doesn't have to answer any
that's really
questions
where it is.
about, it was
the review is going to be thorough and
Congress targeting
transparent.
crypto or the Treasury targeting
It is clear
crypto.
to your last question. It's clear that we do need to strengthen supervision and regulation, and I assume that there will be recommendations coming out of the report, and I plan on supporting them and supporting their implementation.
Sorry, and the final point, can we feel confident that these weaknesses don't exist elsewhere, given that they got missed at this bank?
These are not weaknesses that are at all broadly through the banking system. This was a bank that was an outlier in terms of both its percentage of uninsured deposits and in terms of its holdings of duration risk.
No, that's
And again,
bullshit.
Supervisors did
I don't
get
buy
in
that.
there and
What about
as
Credit
you know,
Suisse?
obviously.
What about UBS? What about Deutsche
they
Bank?
were
What
on
about
this
First
issue, but
Republic?
nonetheless, This still happened.
What about all the
that's
like
really
everyone's
nature
just
of the
focusing on
interview-
Silver Valley
of the review.
on Silver Valley?
Just
Like
to
that's
discover that.
bullshit. Like I want to hear questions about First Republic Bank and
Michael McKee
and
from Bloomberg Radio
Credit
and Television.
Suisse.
You've been very consistent in saying that the Fed would be raising interest
Oh,
rates.
we're
and
going to work
holding
with
them there
our
for quite some
international
time.
central
Following
banking
today's
partners
decision,
to
the
mitigate
markets
the
have now
crisis.
priced
Well,
in,
what the fuck does
one
that
more
mean? Why aren't
increase
these guys
in
asking
May,
questions
and then
about it?
every meeting the rest of this year, they're pricing in rate cuts. Are they getting this totally wrong from the Fed, or is there something different about the way you're looking at it, given that you're now thinking that
He's not going to answer
moves
that
might
question
be
directly,
appropriate
bro.
as opposed to ongoing?
So we published an SEP today, as you will have seen, and it shows that basically participants expect relatively slow growth, a gradual rebalancing of supply and demand in the labor market, with inflation moving down gradually. In that most likely case, if that happens, participants don't see rate cuts this year. They just don't. I would just say, as always, the path of the economy is uncertain, and policy is going to reflect what actually happens rather than what we write down in the SEP. But that's not our baseline expectation.
Well, if I could follow up and ask, as you look forward into the rest of the year here, are you saying that what you see and the 5.1% basically consensus is based on it will be sufficiently restrictive, or is it leavened by the idea of you don't know what's going to happen? In other words, what should people
I'm really
think about
glad
in
I
terms
shorted
of
up there.
how
He
the
basically
Fed
just said,
thinks
we're
about how
not
far it
cutting
is from
rates
the
for the
terminal?
whole year. Like,
It's
that's
going to
basically what he
depend.
just said.
Remember, we're looking, for purposes of our monetary policy tool, we're looking at what's happening
Wow.
among the banks and asking, is there going to be some tightening in credit conditions? And then we're thinking about that as effectively doing the same thing that rate hikes do. So in a way, that substitutes for rate hikes. So the key is we have to have policies got to be tight enough to bring inflation down to 2% over time. It doesn't all have to come from rate hikes. It can come from, tighter credit conditions. So that
Yeah,
we're
it
looking
doesn't
at-
have to come from hikes.
It's highly uncertain how long the situation will be sustained or how significant any of those effects would be. So we're just going to have to watch. In the meantime, and obviously at the end of the day, we will do enough to bring inflation down to 2%. No one should doubt that.
Let's go to Rachel Siegel.
No matter what, we're doing 2%.
Hi, Chair Powell.
I don't
Rachel
like
Siegel from
basically. We
Washington
don't give a
Post.
shit
Thank you
what
for taking
breaks.
our
We're doing
question.
2% no matter what.
I know we've talked a bit
That's
about
a
how
good
Silicon
stance
Valley
for him
Bank
to have.
was unique to a certain sector of the economy.
Silver Valley
There's
Bank
also
again.
growing
with these
concern that
fucking-
there are financial stability risks from the commercial real estate market and loans that will begin to roll over later this year and next, and that smaller regional banks also disproportionately hold those loans. Is there a risk that could mimic the kind of what we saw with SVB to banks that disproportionately are focused in commercial real estate?
He literally
You know,
just answered
well
that
aware
question
of the
already. He
concentrations
said they
we
were
have
an
in commercial real
outlier.
estate.
She's
I
asking
really
a
don't
stupid
think it's
question.
comparable to this. The banking system is strong. It is sound. It is resilient. It's well capitalized, and I really don't see that as at all analogous to this.
And one other question, would you be open to an independent investigation separate from the Fed's probe?
I welcome. It's 100%.
I
certain that
welcome
there
it.
will be
Damn.
investigations.
Okay.
And outside investigations and all that. So,
Woo!
we welcome-
All right,
when a bank
Jerome.
fails, there are investigations, and of course, we welcome that.
Edward.
Thank you, Mr. Chairman. Edward Lawrence from Fox Business. Inflation has been rather sticky, so do you need help from the fiscal
Sticky?
side to get inflation down faster?
We don't assume that. We don't give advice
fuck?
to the fiscal authorities.
Who
We-
uses
we-
the
we
word
assume
sticky
that,
to describe the
we take
monetary
fiscal
policy?
policy
What?
as it comes to our front door, stick it in our model along with a million other things, and we have responsibility for price stability. The Federal Reserve has responsibility for that, and nothing is going to change that. So we will get inflation down to 2% in time.
And if I could follow on that, but they're working, the spending that's happened is working against what you are doing, right? So it's prolonging inflation?
You know, if you have to look at the impulse from spending, because spending was, of course, tremendously high during the pandemic, and then as the pandemic programs rolled off, spending actually came down. So the sort of fiscal impulse is actually not what's driving inflation right now. It was at the beginning, perhaps, part of what was driving inflation, but that's not really the story now.
Let's go to Neil Irwin.
Hi, Chair Powell. Neil Irwin with Axios. Two questions about aspects of the government's response on Silicon Valley Bank 2 weekends ago. First, why is this new bank funding facility done under Emergency 13.3 authority as opposed to expansion of the discount window, changing the terms of the discount window that's been around a long time? And second, can you discuss the Fed's role in the FDIC guarantee of uninsured depositors and why there's $143 billion on your balance sheet last week supporting that deposit guarantee?
Sure. So
Thank you.
13.3 seemed like
Start
the right-
talking about the
we
real
have a little more
questions.
flexibility
What about the
under
$300 billion
Section 13.3?
you just
We've done quite a lot
added to your
under
balance sheet to
discount
bail
window
out
as well. We needed to
foreign
do a special
banks?
facility that was designed a certain way, so we did it under 13.3. Really no magic to that. It's only available in unusual and exigent circumstances, and it has to meet certain requirements, but it seemed to be the right place. So with the FDIC, we're lending to the, in effect, we're lending to the bridge bank. So that's where the funds came from, and it's a loan that's 100% guaranteed by the FDIC, so there's no risk in it for us.
Chris Rugaber.
Thank you. Chris Rugaber at Associated Press.
That was a dodgy
the
answer.
SEP suggests one more rate hike, as does the change in the language in the statement, in which suggests that you're perhaps nearing the end of a cycle of rate hikes. Do you feel, though, that if inflation remains high, you'll be able to resume additional hikes as needed, or have you somewhat tied your hands here with these signals about rate hikes coming to an end? Thank you.
No, absolutely not. No, if we need to raise rates higher, we will. I think for now, though, as I've mentioned,
Good.
we see the likelihood of credit tightening. We know that can have an effect on the macroeconomy, on demand, on labor market,
Good.
on inflation, and we're going to be watching to see what that is, and we'll also be watching what's happening with inflation and in the labor market.
Good.
So we'll be watching.
Hold
all
your
those
ground,
things.
Jerome. I like
And,
that.
Of course, we will eventually get to tight enough policy to bring inflation down to 2%. we'll find ourselves at that place.
Kyle.
Hi, Chair Powell. Thanks for taking the question. Kyle Campbell with American Banker. I have a couple questions about the balance sheet. First of all, I'm curious at what point the financial supports that the Fed is extending through the discount window and through its enhanced lending facility might be at odds with the objective of reducing the balance sheet. And I'm also curious what your thoughts are on not just the availability of reserves, but the distribution of them throughout the banking system, and at what point you might be concerned about it being scarce for certain banks.
So people think of QE and QT in different ways, so let me be clear about how I'm thinking about these recent developments. So the recent liquidity provision that has increased the size of our balance sheet, but the intent and the effects of it are very different from when we expand our balance sheet through purchases of longer-term securities. Large-scale purchases of long-term securities are really meant to alter the stance of policy by pushing up the price and down the rates, longer-term rates, which supports demand through channels we understand fairly well. The balance sheet expansion is really temporary lending to banks to meet those special liquidity demands created by the recent tensions. It's not intended to directly alter the stance of monetary policy. We do believe that it's working. It's having its intended effect of bolstering confidence in the banking system and thereby forestalling what might otherwise have been an abrupt and outsized tightening in financial conditions. So that's working. In terms of the distribution of reserves, we don't see ourselves as running into reserve shortages. We think that our program of allowing our balance sheet to run off predictably and passively is working. And of course, we're always prepared to change that if that changes, but we don't see any evidence that that's changed.
Katarina.
Hi,
You guys are
Chair.
seeing how close this price action is getting to my bids, and it's not hitting, right?
The minutes of the
crazy.
January-February meeting, the last meeting, indicate that you discussed the possibility of runs on non-bank financial institutions and the impact of large unrealized losses on bank portfolios.
Come on.
Can you talk a little bit more about that discussion, kind of what was talked about in light of that? And then why didn't the Fed do anything about that at that point to ultimately prevent, what happened this month?
I mean, to be honest, I don't recall the specifics of that. It's
Come on, fill
quite an
me.
interesting 7 weeks.
Oh my God.
But I will tell you though that we have.
Are you guys really
there have
seeing
been
this?
presentations
What the
about interest rate
Like, I know
risk,
there's a
and
delay
it's
on the
been in all
stream, but it's
newspapers.
like,
it's not a
you
surprise
guys
that
have got to
there are
be like
institutions
this.
that have.
You've got to be kidding me.
That have
Who
had
on the stream
unhedged
is a whale
long
that's
positions
front running
in
me right
longer
now and not letting me
securities
fill
that
my
have
bid
lost
down here?
value as longer term rates have gone up due to our rate increases. So that's not a surprise. I think
Watch it,
as-
fill
as
me,
you
and then
know,
just nuke.
as is now on the public record, the supervisory team was apparently engaged,
All right, there
very
it
much
goes.
engaged with
Filled
the
me.
bank
Thank you.
repeatedly and was escalating.
Thanks,
but,
chat, for letting me
nonetheless,
fill.
What happened
Damn.
happened, and so that's really the purpose of one way to think about the review that Vice Chair Barr is conducting, is to try to understand how that happened and try to understand how we can do better and what policies we need to change. I mean, one thing is the speed of the. I'll come back to that. The speed of the run. It's very different from what we've seen in the past, and it does kind of suggest that there's a need for possible regulatory and supervisory changes, just because supervision and regulation need to keep up with what's happening in the world.
Can you confirm whether or not the board knew about these escalations by the examiners in San Francisco?
I will have to come back to you on that. Yeah, I don't know.
Yeah, he's not going to know that.
Simon Urbanovich with The Economist. Thank you very much. Chair Powell, you've stated twice today that all depositors' savings in the banking system are safe. Are you saying that de facto deposit insurance covers all savings? Shouldn't
650.
Congress
That's
have
the
a say in
liquidation
that?
happening right
And just
now.
by way of example, if a bank
That big,
with less
that
than $1
big
billion
bounce
in
right there.
assets
That was
fail,
the liquidation
are you
coming in.
promising to bail
So
out
this is
all
either
of
going to
its
really nuke
depositors?
from here.
Well, I'm not saying anything more than I'm saying. So, but what I'm saying is you've seen.
I'm gonna close half the long.
We have the tools to protect depositors when there's a threat of serious harm to the economy or to the financial system, and we're prepared to use those tools. And I think depositors should assume that their deposits are safe.
Let's go to Greg Robb.
Thank you, Chair Powell. Greg Robb
Lower
from
my
Market Watch.
average again. I'm
I was
just
wondering
going to
if you could
average
give us
this
a little
down
bit
while
more
my
color.
short
You gave
stacks.
just a little bit of color. You said during the first week of the Silicon Valley weekend, you said the question you guys asked was, how did this happen when you saw Silicon Valley Bank? So I was wondering if you could go to the Credit Suisse merger. I mean, wasn't that the big gorilla in the room? Didn't you breathe a sigh of relief when that merger happened? Thanks.
Sure. So, that was really the Swiss government. We, of course, were following it over the course of the weekend, and we were engaged with their authorities in the way that you would expect, all the ways that you would expect. It seems to have been a positive outcome in the sense that the transaction was agreed to, and it has been, the markets have accepted it, and it seems to have gone well, and I think there was a concern that it might not go well. So coming into the middle of this week, yes, I would say that has gone well so far.
Nicole.
Hi, thank you, Chair Powell. Nicole Goodkind with CNN Business. In the summary of economic projections, the FOMC sees the unemployment rate increasing to 4.5% this year.
Unbelievable.
I'm wondering how you anticipate preventing this from snowballing while using the admittedly blunt tools at your disposal.
So that's an estimate of what will happen as demand slows and as conditions soften in the labor market. And it's a highly uncertain
27,350.
And
seriously, $12 or $22?
We have to bring inflation down to 2%. The costs of bringing it down, there are real costs to bring it down to 2%, but the costs of failing are much higher.
I feel like Uncle Roger. Hiya! Like, how did you not by $22 fill me?
Back in place, get inflation, make sure that inflation expectations remain anchored. You can have a long series of years
Not
where
on my A
inflation
game
is
today, boys.
high and volatile, and it's hard to invest capital. It's hard for an economy to perform well, and we're looking
unbelievable.
to avoid
This
that
long would be
and,
in profit right now.
to get back to where we need to be, back to where we were for a quarter century, and get there as quickly as we can.
But I guess the question is, historically, it's hard to...
Just the mic, please.
Yes, sir. Historically, it's been hard to contain unemployment, and the question is, do you worry about some sort of snowball effect, and how do you factor that into your projections and your thoughts?
It depends on whether so recessions tend to be nonlinear, and so they're very hard to model. The models all work in a kind of linear way. If you have more of this, you get more of that. But when a recession happens, the reactions tend to be nonlinear, and that's what it.
Come on.
So we don't know whether that'll happen this time. We don't know. If so, we don't know how significant it will be.
Thank you.
So, we're very focused on getting inflation down. Because we know in the longer run that is the thing that will most benefit the people we serve. That's how we can have we've had very strong labor markets through these long expansions that we've had. 4 of the 5 longest, or 3 of the 4 longest expansions in U.S. history have been really since the high inflation period. And the reason was inflation wasn't forcing the central bank to come in and stop an incipient or an expansion. You can have very, very long expansions without high inflation, and we had several of those, and they're very good for people. You see late in an expansion, you see low unemployment, you see the benefits of wages going to people at the lower end of the wage spectrum. It's just a place that we should try to get back to.
Jean.
Hi, Chair Powell. Jean Young with Market News. I just wanted to ask, with all the events of the past 2 weeks, do you still see a possibility
When this
of a soft
bounces, it's
landing?
going to bounce so hard.
It's too early to say really whether these events have had much of an effect. It's hard for me to see how they would have helped the possibility, but I guess I would just say it's too early to say whether there really have been changes in that. The question will be how long this period is sustained. The longer it's sustained, then the greater will be the likely declines in or tightening in credit standards, credit availability. So we'll just have to see. I do still think, though, that there's a pathway to that. I think that pathway still exists, and we're certainly trying to find it.
Nancy.
Hi, Chair Powell. Nancy Marshall-Genzer with Marketplace. Just wondering how many financial institutions have been issued matters requiring attention or matters requiring immediate attention citations at this point?
How many? I don't know. But those are serious regulatory, particularly immediate attention. And I guess there were 6 of them. So.
And getting to the seriousness of it, how are you going to ensure?
I don't know how many there
that
are. I
banks
guess there was 6.
Comply with these citations, take them seriously. How will you enforce them?
That is a great question and is right in the heart of what the review will be doing under Vice Chair Barr's leadership. So I think that's what you think about. What can we do to make sure? But again, that's not for me to answer
So
today.
you don't have specific thoughts on that?
Well, I see. If I did, I wouldn't share them because I really, this review's going on, and I want nothing other than us to find out what happened and why, figure out what we can do to do better, and then implement those changes. That's all I want. It's for me to be giving you my half-formed or partially informed thoughts. It just isn't appropriate. There's a real serious review going on with people from all over the Federal Reserve System who are not connected to this, to this work, not connected to this bank, and under again Vice Chair Barr's leadership, and I'm confident that it will produce a satisfactory result.
I'm using order flow right now because it's so volatile. I'm not using fibs or anything.
Thank you, Chair Powell.
If I was, I would have been drawing them.
Yahoo
Takes too much time.
Curious, how do you view
You got to look at
financial
the tape
conditions right now
when it's
if
really
credit
volatile like this. You
becomes
can't
expensive
be
enough,
drawing stuff on
choking
your
off
chart
growth,
when
as
it's
you said
super
you're
volatile
watching
like this.
for? Would that situation warrant a rate cut? What situation would warrant a rate cut? And have the bank failures
gonna get
prompted
liquidated
any
on this
discussion
long
around
here.
changing the implementation of the balance sheet runoff? Thank you.
So we haven't really talked about changing the balance sheet implementation. That's not something we've discussed yet. As I mentioned, we're always willing to change that if we conclude that it's appropriate, but we're really not seeing any signs there. Sorry, then the question before that was, just give me a...
Curious how you view financial conditions now, and if
Yeah,
credit were
okay.
to tighten enough, if that would prompt a rate cut.
So, financial conditions seem to have tightened, and probably by more than the traditional indexes say, because the traditional indexes are focused a lot on rates and equities, and they don't necessarily
Perfect bounce
capture,
off this range line that I drew at the beginning
lending
of my
conditions. So
stream, by the
we
way.
think that,
so far, at
so
least.
there are other measures which, if they're focused on
Tapped here, too.
bank lending conditions and things like that, they show some more tightening. The question for us, though, is how significant will that be, and how, what will be the extent of it, and what will be the duration of it, and then once you know that, there's a fair amount of research about how that with broad uncertainty bands, how that works its way into the economy over what period of time. And so, so we'll be looking to see the first part of that, like how serious is this, and how does it look like it's going to be sustained? And if it is, it could easily have a significant macroeconomic effect, and we would factor that into our policy decisions. I mentioned with rate cuts, rate cuts are not in our base case, and so that's all I have to say. So, thank you very much.
Well, that's it for that. Alrighty, guys. So I'll do a little summing up real quick, and that'll pretty much be it. This is going to end up bouncing like super hard here. Like anybody that's short is going to end up starting to close out here. And then people are going to start at the same time also start buying these like real lower time frame like lows and stuff. So I think that this is really going to bounce. On that note, I'm going to be closing this short. And then I'm also going to close out half of my long here at break even to take a very minimal loss on that. Average out that way. I've only taken a $10 loss in the position. If this rockets up from here, that's either break even or at a win. Or if it goes lower, I can like re-add and average down. The next average in that I'd be looking for would be a lot lower. It'd be like 26.5. But I don't think that we're going to get here. That's why I closed the short. Again, in the stream, sorry for sounding like total ass. Try and blow my nose again real quickly here. I want to sum up rather quickly. Me and my daughter need to have a late lunch today. I need to make some peanut butter and jelly sandwiches. But basically, to sum up the meeting, he made it super clear that he is 100%. Oh, I actually. Wait. Yeah, I'm stupid. I'll just leave this open for now. Anyway, he made it very clear. 2% inflation. If they need to hike rates more, then they're going to hike rates more. And that's just the way that it's going to go. So that being said, let me do this real quick. There we go. I'm at a 0.2, $12 loss. That's fine. The other wins that I had, like it's like a small win for the day. My other bid is going to be here, 26,875. And that'll be for 0.02. And we'll just open up a bid there real. Oh shit. Oh my God. I just fucked up. I just fucked up. All right. Well, that works. I accidentally was on the close tab and not the open tab, and I just fucked that up. This is why you don't trade when you're sick and not feeling great. That's all good though. For the most part, I won. I think I'll still open up a small long here like I was already in anyway. But whatever. Anyway, guys. There we go. Anyway, he is basically going to be staying in the mindset of just taking it meeting by meeting, seeing how this whole bank thing kind of plays out. Obviously, he's right. Like it's super, super recent. So that's totally fine. Like it's going to take some time to play out. Is there going to be contagion further here in the United States? He can't answer that directly. He has no idea. So that's going to kind of be like something that we're going to have to figure out. He also mentioned that, they don't necessarily have to tighten rates or hike the rates in order to have inflation come down. Like as they can do enough with rates that it'll affect other industries and stuff enough that inflation will come down naturally. That's what he's referring to. I think that that's a really important point to be taking away from this meeting, to be honest. If you don't take anything else away, then take away that and also take away the fact that they are staying the path. He is not going dovish. If they need to hike rates more, then they need to hike rates more. Oh, well. If they lose jobs, oh, well. At the end of the day, demand is so high because people have so much money. There's 2 jobs for every one unemployed person, and unemployment is at 40, 50-year lows. That's bad. That's like a super big imbalance. That's what's a large contributor to inflation. How do you fix that? Well, unfortunately, people got to lose jobs in order for people to have less money, in order for unemployment to go up. And basically what I'm saying is unemployment has to go up in order for inflation and demand to come down. That's the way that it works. Whether that's like the banking industry breaking or the real estate industry breaking or what some sector breaking, like the whole market cycle is all cyclical anyway. So the first thing that happened is like, okay, there was like the COVID trade. That was like the tech trade, right? Tech was super hot. All tech was going to the moon. That was the trade to be in. And that trade ended. That was like a good 2-year long thing, like until 2022. That was like pretty good. Then inflation became like entrenched and we knew how bad it was getting. And then the next trade out of that was into bonds. And the bonds started pumping like crazy. And that was like the bond trade. And now I think the next trade that we're going to start phasing into is either the automobile industry or the real estate industry. Not too many people are talking about the automobile industry. Average payment for a brand new car right now is like $1,000 a month across the United States. That is absolutely insane. That's not going to be, that's not going to last. That's also highly irregular. Like, I think that needs to figure itself out first, and then the housing industry will probably figure itself out, down the road or slowly or whatever. I don't think that we're going to have a housing crash per se, because if we did, that would cause a ripple effect with our banks, because what do banks hold? They hold bonds, and they hold treasuries and stuff, and then they hold mortgage-backed securities. Like, that's what the banks have as collateral, and that's what's on their balance sheet. So mortgage-backed securities crashing because the housing market tanks would be bad. But at the end of the day, Jerome Powell said, hey, look, it doesn't matter. Like, did housing purchasing slow down? Yes. That's a good thing. That means that the beginning of fixing the overall problem has already begun, because you don't have everybody and their mother going out and signing mortgages on houses. That's a good thing. That means that it's getting a little too expensive to buy a home right now. Okay, cool. That means that the economy is going to start to cool off. Wages need to catch up with the inflation. The inflation needs to moderate, and just he needs to get everything in balance. This is the kind of thing that takes years. Like, it's not a very easy thing to do. I respect that man a lot. I can't even imagine like how hard that guy has it, like balancing the lives of 380 million people and then throwing international institutions like together into the mix with all that, and being able to manage that is insane to me. Like, that's so nuts. I think he's doing a good job. I think that he's doing the right thing. Still hiking rates. I think that is a good idea. Like, the banks playing out is the banks playing out. Take the information as it comes in, reevaluate, and then say, okay, for next meeting, we can go another 25. There's clearly no contagion here in the United States. Otherwise, we would have seen like 10 banks fail just in the US by now, and it would have been a catastrophe. We haven't seen that. It's been like literally 2 or 3. That's in our country. Was it Signature Banks, Silver Valley Bank? Why they all start with S's? Silver Valley Bank, Signature Bank, and then I guess it was like First National or whatever bank that went under. And then on the global scale, it was like, Credit Suisse and Deutsche Bank and UBS, the merger and stuff like that. But in general, it wasn't like serious contagion from that one bank itself. Plus, clearly, if they're going to be doing a ton of investigations outside of the Fed, clearly there was some sketchy stuff going on with that. Now, whether that sketchy stuff was the bankers or whether it was people in the government trying to stomp out crypto, that's yet to be seen. That's something that affects our markets directly, like digital markets directly, not necessarily legacy markets. But clearly, Jerome Powell, when it comes to like the Fed and stuff, is not worried about whatever that is. Like, they're not political. They don't swing left or right. The political stuff has absolutely nothing to do with the Fed. They never comment on congressional policy, administrative policy, executive policy. They don't comment on any of that stuff. Like the Biden administration, what they're doing, they work with the Treasury now and then. They work with the IRS now and then. They work with international central banks on a pretty fairly regular basis. And their job is literally just price stability. He states that every time, and everybody thinks that he's like this magical guy that can just magically control everything. Unfortunately, it does not work that way. So I think that he's doing the right thing by staying the path. But he also made it sound very clear that at no point this year, and he has said this before, at no point this year would we think about cutting rates, which that's another really big takeaway. Like, he's not even considering that for the entire year. Like, we're only the first quarter. It's the end of the first quarter coming up. And he's not, he said that multiple times. He said that last year. He said that this year now multiple times. Clearly, cutting rates is not on the table. Pausing, yes, maybe. But if the U.S. economy, if they really do prove to us that, you know, community banks and regional banks and stuff are not going to be cascading and failing left and right, the first thing that they need to do is instill that confidence with people like me and people like you and everybody else in the world that in our nation that has a fucking bank account, that no, it's not a systemic risk. We're not going to start seeing banks falling like dominoes. Your stuff is good. We're okay. First, they need to gain that trust back. When they do that, then I think it would probably be the time where they can assess, okay, and say, all right, we're going to end up and we're going to keep hiking rates at 25 basis points until, you know, we get to where we want it to be. At the end of the day, they also now need to decrease their balance sheet by another $300 billion compared to what it was already at before this whole mess. He didn't comment very much on the Credit Suisse or UBS thing. He didn't really want to talk about that. So unfortunately, I think that that's just going to leave us with more questions than answers. But at the end of the day, I'm a huge proponent of, you know, I don't know, not helping foreign powers with their own fucking problems. You know, like Ukraine is one, like I'm not down with that, like giving a shit ton of money to Ukraine. We've got shit happening here. It could have been better spent elsewhere. That's not in Ukraine, funding a war that pretty much nobody wants. Like nobody on either side, no matter which way you fly politically, pretty much nobody wants this to be happening. So I feel like that's a pretty fair assessment. But just in general, like, you know, Credit Suisse or the Bank of Switzerland or whatever, like having a hard time, that's their problem. You know, like that's a totally different currency. You're talking about the franc. You know, I mean, that's like, why are we, they're not going to come, like, what did here's my question for that is like, what other countries came to our aid in the 2008 banking bust, right? Like with the real estate crashing. You know, like did Italy step in? Did Switzerland step in and bail us out? No. The Fed bailed us. We bailed ourselves out of our own fucking mess. Like other countries didn't come help us. So that's kind of why I'm against that stuff. It's like we're always the first nation to be like, oh, you need help? You need help? You get a check. You get a check. Everybody gets a check. You know, like it's kind of ridiculous. They spend money frivolously, and that's half the reason why our nation's in this situation that's in terms of inflation anyway. But that's a whole conversation for another time. I'm not going to dwell on that. It's about 2:30 here. I think that's pretty much the stream. I hope that you guys enjoyed that. Again, I stream every Friday night at 8 p.m. Central Standard Time, and obviously here on YouTube, you know, and whenever there's an FOMC meeting and stuff like that. Again, I apologize for sounding like garbage today. I am pretty sick, but again, hope you enjoyed the stream. Make sure that you check out those links that are in the description below for High Block Capital. I have, you know, links to sign up and trade, TradingView, like all of that good stuff. If you guys are interested, make sure that you check that out. Make sure that you follow @VenomAlgo on Twitter. That really helps me out. That's in closed beta with Astrobit right now. If you want to know about how to get into that, then make an account on Astrobit. Once you join, you'll get an email. Click that Discord link, hop in the Discord, read the pinned tweets in my channel, and follow the instructions. But other than that, if you just want to wait for the free public beta, there's going to be 10 spots for that. And that's going to go on April 3rd, right? Yeah, April 3rd. I didn't want to do it on the 1st. It's like April Fool's Day. It's kind of like a weird day to be launching. So that's kind of weird. But anyway, I hope that you guys all have a wonderful rest of your week. Obviously, you guys know where to find me in the Astrobit Discord, in the Cardinal House Discord, in the Crypto Kingdom Discord, obviously on Twitter, and right here on YouTube. Hope you guys have a wonderful end of your day. I hope that you guys learned something today from, how I was scalping. Kind of got myself into a weird situation early on with a long and a short on top of each other right in the middle of the price action, but it resolved, ended up being like a slightly profitable day. Honestly, I probably should have traded with a bigger stack. It wasn't very much. It was like 20, 30 bucks or something. Not very much, but it is what it is. You win some, you lose some. I'll post some more trades, on Twitter as they come. Obviously, P&Ls and stuff like that will get posted also. So hope that you guys have a wonderful rest of your day. And until next time, happy trading.